Hello, everyone. Welcome back to the Ergo Prism channel. I'm here with a special guest from the Nervos ecosystem. He is Matt Quinn. Welcome, Matt.
Thanks for having me. It's great to be here. Looking forward to this discussion.
So I'm going to start by prefacing the conversation with the idea of interoperability, since this is core to Nervos's mission. Interoperability is a foundational principle of the internet, which most users take for granted. Even cellular and radio communications all rely on interoperable protocols. Even something as simple as email, which originated back in the early 1970s, we still use and has plenty of interoperable traits. With that being said, what is Nervos project? What is the Nervos Network project, and what value propositions does Nervos uniquely possess in the crypto industry to help serve people as it pertains to interoperability?
Sure. I'd say Nervos is, a reimagining of what smart contract platforms should be intended to do. I think if you look at something like Ethereum, it's mostly designed to say, like, you deploy token contracts on Ethereum, users are interacting with Ethereum. From a developer perspective, the function calls and stuff are going directly to Ethereum, but we know that like a single chain won't be enough. So Nervos was designed as this idea of a system to build systems on top of, and we see now with we have a layer 2 EVM called Godwoken that's been deployed, and this is kind of like the long-term vision of Nervos coming into view. Where users are interacting with that EVM and not really so much with the Nervos chain itself. And in terms of interoperability, because that layer 1 blockchain is, I think, more general in what it's intended to do, instead of being, say, like an application development platform, it's more just a like raw computer. So with interoperability, it gives us a lot of flexibility in terms of what wallets are users using to interact with the chain. So right now you can use your Ethereum wallet. There's been a in the works that people could use EOS or Tron wallets. There's some stuff on testnet around using Cardano wallets. A lot of it has to do with user demand and kind of meeting things where they are, but Ethereum wallets are there now. I guess Unipass is another great example. Unipass, you can use your mobile phone. There's a secure enclave in mobile phones that can hold cryptographic keys. And I think EOS supports this, but I don't know of any other chain, but you can use that with Nervos. And yeah.
Right. Very interesting. And why does Nervos feel that mission of interoperability and providing a raw computer? Why do they feel it is important for developers and users to have those tools at their disposal? Why have this kind of origination platform where you can go out and do whatever you want with it and interact with other foreign blockchains and deploy dApps that way and use kind of make use of the different islands we have in this industry and just kind of bridging them all together? Why is that important for Nervos?
Yeah, I think we need universal standards. I think right now, because we're still in the early days, the Ethereum ecosystem, the EVM, is kind of like the de facto standard, but it seems like there is tension there. Like, there's all sorts of WebAssembly blockchains. There's now people writing smart contracts in Rust for different blockchain ecosystems. And I think it's kind of it's up for debate if someone would try to argue that the EVM and Ethereum will be the standard, say 20 years from now. Like that standard is just locked in, similar to TCP/IP or HTTP. Like, those are standards that will not change in 100 years. If people are still using the internet, it'll be TCP/IP and HTTP. And I think to make the same argument for the EVM, it's tough. I think there are people who would confidently assert it, but I think practically speaking, we need more universal standards. And I don't say that as Nervos is proposing those universal standards, but Nervos is designed in a way that the the system can make use of those standards. So the virtual machine is based on the RISC-V instruction set, which is just a standardized open source instruction set, just like x86 for a chip in a computer. ARM is another example of a machine instruction set. So any standards like programming languages or frameworks, that interact with computers can interact with Nervos. So originally, a lot of the early system scripts were written in C. Now we have Rust-based development, and we can support other virtual machines like the EVM and other programming languages. But the idea is that Nervos itself is going to be standard compliant, and that hopefully moves everything above it to, well, everything above it will be based on standards. And there's just no forcing people down a certain road because we made some decision how many years ago, and now it's too late to change it.
How can an existing DApp from a foreign blockchain be retrofitted back into Nervos if they choose to migrate everything they've built back into Nervos and then make use of that universal interoperability?
Yeah, so right now the layer 2 EVM is a great example. So originally, the first iteration of that EVM, there was some tweaking required. We'll be releasing a new version in the next couple of weeks, which significantly reduces the amount of tweaking required to port an Ethereum-based app. But I think the most important thing is that it requires some software in the middle to provide a platform that is what that DApp is expecting under the hood. So if you have an Ethereum-based app, you can't deploy it on Nervos CKB directly because those computing environments are completely different. They're speaking different languages. But when we put an EVM on top of Nervos, then you can deploy those dApps right onto that EVM. And I think for any other, I guess, environments that we would want to target that would be popular, a similar kind of software in the middle would be required.
What other environments you have in mind, in your opinion, that would be after Ethereum and that EVM? What other blockchains would you want to target after that you know of so far?
Libra has been thrown around, but I haven't seen any movements in that direction. Like there is a virtual machine that underlies Libra that could be supported. Bitcoin script is another thing that I've heard. So basically would have an interpreter for Bitcoin script. So if someone had Bitcoin, I guess, you think of something like Lightning. It's just like Bitcoin transactions that there's a Bitcoin transactional system that people have created. Nervos could interpret that. I don't know if these things will be implemented because you need significant developer adoption in an ecosystem to go through the work of bringing this here. I think a more common path for interoperability that we would see is opening up support for different wallets into, say, like if we have an Ethereum virtual machine running on layer 2, you can use your Ethereum wallet with that now. But what if you could use your Cardano wallet instead? And we had this with the ADA bridge project that we've worked on for some time and unfortunately have not gotten to the finish line yet. But the idea would be that if someone had ADA in their Cardano wallet, they could go to a website that was a bridge, and they could interact with that bridge and move their ADA over to Nervos, deposit it into the layer 2 EVM, and then they could interact with Ethereum-based apps through their Cardano wallet, running on Nervos. And like that.
Oh, wow.
I think the challenge that starts to come in there is around standards, because somebody is just signing a transaction, but our Cardano wallet doesn't know like what an Ethereum dApp is doing. So like users are kind of blindly just signing like do this because they can't, like the wallet can't make sense of that. And then it comes back to that idea again around like we're going to need standards for these systems. Like we're not going to be able to just say like this is user friendly because it uses Ethereum, but there's 5 other ways that blockchains work. You have the Cosmos ecosystem, which is completely different. You have Solana, which is completely different. And it's going to fall apart if these things are fragmented. So I think we're kind of charging into that challenging territory to say, like, we know that we can do this, but we also know that it can be improved. And that's not always technology under the hood. Some of that is just going to be agreements on standards and implementation of those standards around. So MetaMask snaps, I think, is a great example of like where things will go. So MetaMask snaps is basically within MetaMask, you can implement plugins for different chains. And
Right.
yeah, so MetaMask, as far as like user friendliness goes, or like people using blockchains, like I think they probably have the most exposure. I think I can't really think of another project that has, you know, tens of millions of people directly, you know, in a non-custodial way interacting with blockchains. I guess other wallets do, but I don't know. MetaMask stands out.
Who are your competitors in this type of race for universal interoperability, if you can think of any within the blockchain space?
So I think one idea I've had is that there's nobody really competing, because what we're trying to accomplish with CKB is it's very challenging. I mean, like, we're running things like signature verification, like at the smart contract level, which it would be much more optimized to just run that natively in the node itself. But in the interest of flexibility, like, we're running it at the smart contract level, so it requires a ton of optimization to make that work. So I don't see anyone else like trying to do what we're doing. But in terms of like practically accomplishing like the network of blockchains, I guess Cosmos would probably be the closest thing to like a competing vision. So Cosmos is, well, I guess Cosmos or Polkadot, Ethereum maybe. I don't know. I think they gets into so much nuance around just differing visions for how things could work, and we could go into that if you want.
Yeah.
All right. So I think the idea with Nervos is, I think if we think about like a network of blockchains kind of vision, it would be similar to like Ethereum 1 today. Like with Ethereum 1, if you have, you know, Matic is deployed as a contract on Ethereum, and people interact with the layer 2 chain, and then it's secured by the layer 1. But this is as far as it goes. So we don't make it more complicated than that. Now, if we look at something like Polkadot, you have lots of chains connected to a parachain, and all those parachains share security through that main chain, which is similar from a security perspective to that ETH1 vision, but you have that whole notion of parachains built in there. Now, if we go to Cosmos, you have sovereign chains that are not sharing security at all. They're just sharing a SDK or a common language that they're communicating between themselves with, like IBC. But each chain has its own set of validators, and those chains can talk to each other, but from a security perspective, they're completely separated.
I want to talk, now that you mentioned that, about how you think bridges should be approached between chains. And I think of the wormhole exploit with Solana, and how that, even though Solana wasn't necessarily the culprit or the vulnerability in that security breach, it was wormhole. The reputation of that, it was wormhole bridging to Solana with all of these wrapped tokens and wrapped ETH and wrapped, you know, whatever it may be, Sol. The reputation, the negative impact still comes back to that blockchain as well, because it was a bridge to that. So, you know, everybody now in 2022, everything is about bridge. How do you feel about those security assumptions, and how should bridges, if you can talk on that, how should they responsibly be built to avoid these situations? What is the best approach?
Yeah, so I'll start by saying that, yeah, bridges have, I guess bridges are evolving this year. I think as we came into this year, yeah, bridges were very hyped up, and with our narrative of interoperability, bridges were a big part of like, well, what we're going to do this year is we're going to get as many bridges up as possible. And I think we came in strong. We encountered our own challenges, but thinking about the macro environment, this has been a tough year for bridges. I mean, billions of dollars have been lost, and it really is forcing a lot of people to rethink how these things are built. And so almost all bridge hacks have been smart contract bugs, which I don't think there's a way around. I mean, I think just maturity is the only way to get those out. But I guess what was that? The Axie Infinity, the Ronin bridge, that was a compromise of a multi-sig. And I think, people with their tinfoil hats on, probably for years have been saying multi-sig bridges are a terrible idea, because you just have hundreds of millions of dollars that you're just trusting in the operational security and integrity of a few random people. And that's a thin case, especially when we're talking about blockchains, which, think about Bitcoin, just it's absolutely bulletproof. It's, nuclear bomb proof. And if we're going to say, no, we're going to compromise on all that, and we'll just trust that a few people can, control these keys. I think the emerging design is around message passing between blockchains, which I honestly have not had the time to completely get my head around. So there's a project called Nomad, which spun out of Cello, and they're working closely with Connext. And I think the idea is that you're moving user intentions across chains instead of moving assets in more cases. So if I'm on chain A, you're on chain B, and I want to do something on chain B, or you're on chain A, I'm on chain B. I can kind of send a message across to that chain that you're on that I want to do this, and then that can happen over on the other chain, and we can do whatever on our chain, which I know is a terrible explanation. So I would advise people to check out Nomad, because they're inspired a lot by optimistic rollups, and I think the idea is that if something goes wrong, it can be challenged, and you're just not relying so much on the multi-sig validators to do everything for to move these funds around.
Do you think from a regulatory perspective that universal standards on many aspects of blockchain technology, if you have a lot of actors out there that are trying to emulate Polygon Matich's success with bridges, and you don't have those universal standards, and you don't have, as we saw with Terra Luna, there's a bit of lack of accountability that's kind of escapist. Like you can get out of it because of crypto being viewed as the wild west. Responsible actors in the space, is that really going to come from developers wanting to iron out bugs versus building things quickly and rushing it out there? Or do you feel like that from the regulatory side of things, we need more clarity on that in order to push human beings to a point where they'll treat it with the amount of respect and responsibility that bridges need to have?
I think there's definitely going to be efforts on the regulatory front to fix it or to protect people. I think, especially as this continues to grow, I think we're in the midst of exponential growth, and it's just only going to get crazier. I think the Terra collapse is like one example of regulators saying like, hey, like we really have to we got to get something in place here, because this is too much. And I think that's only going to amplify. I think in terms of adoption, like crypto adoption was going to continue to just grow, and the scale of these schemes and the things that people boot up is just going to get bigger and bigger, and they're going to continue to collapse. And I think that is going to cause regulators to panic and get up in arms and say we have to do something here. But crypto's permissionless. I think anything that you try to put in place around people, they're just going to find a way around. And so I think ultimately what solves it is the maturity of the technology and the user base, and just people knowing the difference between things that are sustainable and things that are not. And I guess in the end, being more excited by the real things that you can do with crypto rather than just the Ponzi schemes in the games. And those things are exciting because it's early. Like we don't have that, creative products yet.
Ooh, yeah. Oh wow. I had like 4 different thoughts come to mind. Let's go back.
Yeah.
The collapse of Terra Luna. Well, first of all, do you remember BitConnect?
Of course.
Okay. Not to equate Terra Luna, because there was real developers and a real project behind there. Not to equate that aspect of Terra Luna with BitConnect, but there's definitely a parallel in sort of a lot of confidence in investing in this idea, and then in a subsequent collapse thereafter, like complete collapse.
Yeah.
Now with
I was gonna say the way the collapses played out were pretty similar in terms of like timeline or like feelings. It felt similar.
Yeah. As we saw with BitConnect's collapse in 2017, early 2018, we didn't see Bitcoin go away. We were able to isolate, and legislators also isolate that case as a Ponzi scheme. And then through that clarity, hopefully now we have because we went down that road one time, we have a more responsible approach to just how we view companies being built around Bitcoin and the false promises that they can produce. Now with Terra Luna, everything's fallen that way, but I feel like, I know crypto's in sort of a bear market now, but that also has to do with a wide variety of external factors that include the global economy. So it's really hard to kind of quantify what is influencing what to what degree, but it seems that the Terra Luna collapse was viewed more as an isolated incident, just like how BitConnect was eventually viewed as an isolated incident. And they both were in bear markets, or there was a bear market right after that. Bitcoin went from nearly 20,000 down to 6, but inevitably it rose again stronger. So where I'm getting at with this is that it feels that, at least in my opinion, that you can have 99% of actors in crypto or in any industry do things responsibly. And if you get that 1%, that's all you need. And they're going to shit the party for everybody. It's inevitable. There's always going to be that. I feel like those cases, and the fact that people unfortunately do lose a lot of money quickly, that kind of gets governments that are, notoriously slow at implementing legislation, especially if they don't understand the technology underlying it very well. It helps them to get up to speed, so we can get in a way, the crypto industry more mature quicker. And then the other thoughts I had when you were mentioning all that, wow, my mind's a blank now. Oh, this idea of, you mentioned that people can always find a way with sort of the blockchain technology to kind of go around legislation if they really want to at the end of the day. So they're more providing like legal guidelines more than actually stopping people utilizing this open Pandora's box. It kind of reminds me of the idea of censoring the internet early in the 90s and things like that.
It's the same information flow that you're dealing with. So
same thing. It's impossible to regulate to absolute censorship. Even in China, you have VPNs, you have ways to utilize WhatsApp and things that are not condoned by the government. I agree with you. I feel like that is an inevitability that governments are going to have to cope with. That, hey, you're not able to control this thing. I know that sucks for you, but yes, try to protect the general population so they don't get involved in big connects and Terra Luna collapses. And try to have some standards for that as well. Because with the Terra Luna thing, I don't understand this. They, for their stable coin, they bought all of this Bitcoin in order to collateralize it and back it better. But that doesn't make a lot of sense because you can buy the Bitcoin. Bitcoin is notoriously volatile. So how does that help to provide a stable asset behind it in the short term? Long term, sure, but short term,
I think that was like a long-term place. They basically had a bank run going on, and their idea was if they hold this Bitcoin, people see Bitcoin as a long-term store of value. They can have more confidence that their money is backed by this Bitcoin. Bitcoin goes up over time, and it was a confidence play. Like they needed people to stop liquidating the USD, and but unfortunately, they were under financial attack, so they never really stood a chance. They were under collateralized, and they had a large party, attacking them. It was it's a tricky situation. They never should have gotten so levered up on it. It's that's the challenge. It's like anything, you have to use leverage responsibly, but 5x doesn't sound that much more than 2x, but unfortunately, as far as leverage goes, like it is much more dangerous situation.
Yeah, I'm not sure, and that's I'm sorry for the people that are anti-regulation, but there kind of has to be more transparency on how these businesses are conducted. Right. I don't really see Terra as a completely decentralized top to bottom protocol. I see it more as a blockchain solutions company that was selling their coin to eventually use that financial power to buy another coin known as Bitcoin. And I just kind of see all of these ideas with like fractionalized banks and other things. It's kind of a recipe for disaster. I think the Bitcoin maximalists would definitely point to that and say, hey, look, this is why we warned you that you don't need so many coins.
Financial games is the reason that Bitcoin was designed in the first place. Like Bitcoin was created in response to the 2008 financial crisis, which was a result of very creative financial engineering. And Terra is another example of creative financial engineering. So I think from a Bitcoin maximalist perspective, it's just silly that somebody would do this and call it crypto. It's like clear that there's just some pieces of history missing from people's reading.
Yeah, also on that. I'm not 100% sure because I'm not a big fan of exchanges in general. It's kind of a necessary evil until DEXs take over all of that in a responsible way, which could take even more time. But I believe Terra Luna was on, for example, Coinbase. Do you know?
I think so. Yeah, because I've seen
like there's
some
grumblings
about class action suits, and I think
there's no real investor protection then. Like you buy something on Coinbase, in the US, you have the assumption that this is going to be you've audited it properly before actually offering it as a product.
Yeah,
and that's really a red flag. Like it just seems that everything is it's kind of smokes and mirrors. We're just trying to get in the middle between you and the crypto that you'd like to purchase, the assets you would like.
Well,
we really don't. They're a business, but like it just seems that
they're like a quasi financial entity as well. They're not a bank. They're not subject to those kind of regulations, so they can offer customers whatever they want. It's their right as a business, and I think the history of Coinbase shows that it it hasn't taken very seriously the quality of the assets that it's listed. It's taken seriously the revenue potential of listing those assets. So yeah, I think it's natural that consumers would, over the long arc of time, be burned by the things that they would get on Coinbase. So the incentives aren't aligned there. It's not aligned to provide quality crypto assets to consumers. It's just shovel them whatever you can, whatever's going to drive trading volume.
Yeah, the misconception there is that they would have like a standard way of auditing these products and then
ERC20,
pushing them.
That is the standard. Yeah. If it's an ERC20 token, they can list it.
So before getting into the economic model of Nervos's native coin, CKB, I wanted to ask you very quickly, out of order of my questions. How do you view Bitcoin? There is a bit of a hypocrisy, I find, when you want industrialized nations to, those actors to use it as a store of value with your disposable income. You keep it, you're going to hold it, expecting the price to go up in the future. But then if you're poor or in a tough financial circumstance in a developing country, or even a developed industrialized country where you just have bad governance and you have your fiat currency devalued so rapidly that even us, being in the US, couldn't imagine. Those people, their use case is supposed to be to buy this very volatile asset and use it instead of the fiat currency that was devalued in a volatile way as well. I'm a little perplexed on also not only those two things, but also this idea that we should celebrate banks being able to offer Bitcoin services to wealthy clients and things like that, when Bitcoin is inherently trying to bank the bankless without a bank. So what do you feel about kind of, and this kind of comes out of the maximalist line of view. I see a lot of religious themes thrown around on Twitter from credible so-called sources like Bitcoin Magazine, where we have Noah's Ark, and if you don't get on the Ark, you're going to drown. The whole world is going to hell. Jesus had 12 disciples. Bitcoin has such and such. How do you feel about that whole entire narrative?
I think a lot of these people have too much time on their hands, and I think that's part of the challenge that we face. I mean, it's an inequitable world, and I think some of those things that you're seeing are really just people who are prospering, and this is what they're using their time to do. But to address, kind of like seeing those different sides of the spectrum. To me, Bitcoin is agnostic to what you're going to use it for, and just similar to the internet. And I think we're still in the early days. I don't know. I wish we should cut out that. I didn't say the early days. It's like 14 years in. 13 years.
No, but in the long term scheme of things, it's very early. It's very early.
The reason that thought is coming to mind is it's not so much about the progression of the technology or anything, but the progression of the narrative. More like, if this is something like money is a thousands years old technology, and Bitcoin is still very early. Bitcoin is a substitute for gold. Gold's been with us for thousands of years, and I think the way I look at it is the Bitcoin is going to permeate, in all directions. And I think all of it should be celebrated, all with a grain of salt, and just some understanding that it's going to be a universal thing. So if people find that it's, valuable to store their wealth, because even though Bitcoin is volatile, maybe it loses 50% of its value, it doesn't lose its value as fast as the other alternatives. Or it's just a preferred means of moving money around. I think in El Salvador, I think the idea is that people would want dollars, but now they can have Bitcoin. And I think with innovations in Bitcoin, in some amount of years, we'll be able to see digital dollars move through Lightning as well. So I think it's really about alternatives. I think if for people who want to store their wealth in Bitcoin, I think it's an option. I don't know if Bitcoin is like the way of storing wealth. I think there's lots of asset classes that people with money have access to. So it serves a purpose there too.
Your take is that more options are better all around. Yeah.
Yeah, it just needs to like permeate. Like I think Bitcoin can do incredible things for the world, you know, but you could substitute anything in there if it had the properties of Bitcoin. If people thought about X cryptocurrency the way they think about Bitcoin in terms of the decentralization of the ownership and just the reliability that it's there, it's going to be there. People are going to continue to accept it and think about it in this way. It goes for any cryptocurrency. I mean, we could see, you know, digital dollars flowing through Lightning that accomplish the same thing. I think that enabling of digital payments through this permissionless, you know, network that just spans the globe, like that should do amazing things for our economy. And that's the thing that I think we're moving towards. So I don't get too hung up on like, if it's good for this person, good for that person. To me, you know, from a long-term perspective, as long as it's growing, we're getting there. It is a long road.
Yeah. Ergo is trying to do a few of those things in Bitcoin's with the idea of Bitcoin's first principles. I think every blockchain is kind of an exciting experiment, usually pioneered by an exciting group of people, generation of people, usually millennials, right? People that haven't had the same access to ease of home ownership, of cost of living. I just think it's really interesting how you know, if you look at the cost of education and now, you know, kind of trying to dematerialize that and kind of make it more widespread and accessible to people. It's a really interesting time to be in this space, just because the whole world feels like it's experimental again, considering that all of the cushions around us have been shown to not be so safe in general. Yeah. There's no safety net and before, at least the illusion of that, kicking the can down the road, so to speak, it made you feel comfortable, and in turn have the tendency to be more complacent. And so in the world that we live in now, it kind of feels like this is a mission, no matter which blockchain you're trying to help push forward and give people more options overall. So yeah, that is well put. So finally, the economic model of Nervos is native coin, CKB.
Yeah.
It stands for Common Knowledge Byte.
Yep.
For those people that don't know, the CKB represents cell capacity in bytes as data, and allows users and developers to claim storage space on the Nervos blockchain in proportion to their holdings of CKBs. Yeah. The best example of this is very simple. If Alice owns 1,000 CKB, she can create a cell with 1,000 bytes in capacity, or multiple cells that add up to 1,000 bytes in capacity. She can use those 1,000 bytes to store assets, application state, or other types of common knowledge. Since the native token of CKB represents right to expand the global state, the issuance policy of the native tokens bounds with the state growth. As state storage is bounded and becomes a scarce resource like bandwidth in Bitcoin and computational throughput in Ethereum, they can be market priced and traded. So anyway, with that being said, that's probably going to confuse people at first, but there are a lot of moving pieces when it comes to the native coin of Nervos, the CK byte. So let's start with coin issuance. Many people would like to know, what is base issuance, first of all, and secondary issuance, and how do they function together?
Sure.
Let's start there.
All right. So on the first point around like what the token is doing, I think sometimes when people hear that you can store data on the chain, they think of Filecoin and just like like large data storage. They're going to upload, their pictures, things like that to the blockchain. I just want to clarify that that's not the case. That's not the type of data that would be stored on Nervos. Similar to, say, Ethereum, if you hold tokens on Ethereum, that data is stored somewhere. So that's the kind of data we're talking about, small amounts of data for financial assets. Yeah, I guess that covers that. Now, from the primary, secondary issuance, so the primary issuance is similar to Bitcoin. So it's a halving-based thing. So there's 33.6 billion CKB that will be mined through that primary issuance, and that halves every 4 years. So half of that 33.6 will be mined in the first 4 years, and then half of that, half of that, half of that, and that tails off probably in like 100 years. The secondary issuance it's broken up into multiple components, and it's there to accomplish different objectives. So one objective is to ensure that miners always have a block reward. So it's this concept called tail emission, that without a fixed block reward, you change the incentive structure of mining. So when miners are mining, they have the incentive to mine the next block unless it's more profitable for them to remine the previous block. So if you have a transaction fee based, or if your mining reward is based on transaction fees, you could have blocks that are more profitable for miners than others. And you may run into a situation where it's in a miner's interest to remine the previous block rather than continue progressing the chain if there aren't new transactions. So there's a portion of the secondary issuance that is based on the amount of data that's being stored on the blockchain, and that goes to the miners. There's another portion that goes to holders in the Nervos DAO. So if users are not using their CKB to store data on the chain, they can lock their tokens in the Nervos DAO, and a portion of that secondary issuance will go to them. And the Nervos DAO at this point is only used for that inflation offset, but in time will be used for governance. And there's a third portion that is any CK bytes that say are sitting on an exchange, so they're not locked in the DAO, they're not being used to store data. Though the secondary issuance component for those coins right now is being burned, but in the future, after the foundation's funding has been exhausted, that could be turned on to go into a treasury fund or some sort of development fund to fund the long-term development of the network.
Are there voting structure? Yeah, go ahead.
Sorry. The secondary issuance is constant, so it's 1.344 billion CKB forever. Anyway, you're talking about voting constructs, right?
Yeah, if there's any sort of voting structure in order for the community, certain actors in the community to have a say on, for example, will that portion of the secondary issuance be burned, or will it go back to the foundation, or how are decisions being made for that?
Yeah, so just to turn that on, it's going to require a hard fork. So that will require community consensus around just even to activate that. And so that will be further down the road. I think it's always been our intention to start community governance slowly. And I think we're reaching a point now where we have, I would say, significant involvement and commitment from people in the community who are not a part of the foundation. And I think that to me is very encouraging, and it shows that we're getting to a point that we can start to have voting on different decisions. And yeah, I'm responsible for some endeavors on this front, and I think over the course of this year they'll roll out. But we want to start to empower people in the community who already are committed to seeing Nervos prosper. And we know as the members of the foundation, like we've known since day one that this has to be a decentralized, community driven thing in order to succeed. So we it's in our, it's in the success, it's in the interest of the success of the project to hand over responsibility and to begin to trust people more. But it could, governance is tough. We fortunately have the on-chain mechanism with the Nervos DAO to actually have some concrete means of someone exercising voting. It is coin voting, which is not great. I think the optimism governance stuff is cool. I haven't had a chance to look into it. My understanding is that there's multiple, I guess, means that people can exercise influence or power in that governance structure. So I think we wouldn't want to have something that's 100% coin voting, but if someone has locked, a sizable portion of funds in the Nervos DAO for a long time, they should have a good voice in this community.
Why was proof of work chosen for Nervos? Is it ASIC friendly or ASIC resistant? And why was the UTXO transaction model decided to be used for this project?
Big questions. So proof of work was chosen because it is the thing that's worked. So
yeah,
Ethereum,
pretty much.
Secured by proof of work. We understand what happens in proof of work networks. We know they're not perfect, but they're well understood. And proof of stake, I think proof of stake is really compelling. I think from a standpoint of building ecosystems, like Cosmos is incredible. You have how many tens of chains that they've been able to boot up because they just need validator sets, and you could never do that with proof of work networks. You couldn't have an ecosystem of 100 different algorithms that people are mining. It's just not possible. But we don't really know just the long-term, I guess, the long tail of possibilities with proof of stake. I think we've seen Solana halt, I don't know how many times now, and a lot of that's due to Solana's ambitions, but it also is in the nature of proof of stake networks that they can halt. And I'd done some reading up on Ergo, and I saw that you guys had moved to proof of work because of the implications when you start to get capital locked up in DeFi, kind of messing with the staking incentives. And I know with some Ethereum 2 research that's been out there, that's also something that's been identified, that issuance has to respond to the yield in DeFi. And I know there are people that are working on this, but I think from our perspective, Nervos was already pretty ambitious in terms of the programming model and the virtual machine. And I think to also be ambitious on the consensus front and to have to build that entire domain of knowledge, I don't think anyone was up for it. Is there anything on there? Because I know we'll go to the proof of work function and then the cell model as well. But anything you want to touch on in proof of work versus proof of stake?
Well, yeah. Well, I mean, there's a lot there, right? Two different ways to practice out consensus, right? And so far, there's no proof that the vulnerabilities are yet to be determined with proof of stake completely, because it hasn't been around that as long. Cardano has done a great job to research and theorize how to implement things before they actually do it, which I suppose is why they get a little bit of hate as well, because they they measure twice and cut once, right? Yeah. And that's really interesting. So wait, so is it are the miners proof of ASIC resistant or ASIC friendly?
ASIC friendly. So the phrase we used early on was ASIC neutral, but it does mean ASIC friendly. So the idea is that you can't really prevent people from making ASICs. I think that was one lesson that was learned with ETH hash, and we didn't want to. Well, let me step back here. What the advantage of an ASIC friendly proof of work? I guess that's kind of where we start. So
Well, the hashes are more efficient. They're more energy efficient. I mean, that's true. ASICs are specialized to do that. So in terms of energy consumption, you don't get the same
well, it's just
maximal
raw
output. Yeah,
energy.
yeah,
I don't. I mean, if you say you do something 1,000 times or you do it 1,000,000 times, like it doesn't
yeah,
make it more like energy consumption is gonna move to match your block reward, just whatever the incentive is.
yeah,
It doesn't matter kind of how many times things are moving through the transistors. It does matter for like cross-chain stuff. Like if you want to have another chain check the consensus of your chain, the more efficient your proof of work function is, the better that's going to be. But I don't know, those designs don't really seem all that practical these days. The thing that we really looked at was if we know people are going to make ASICs, let's make it as easy as possible. So, different manufacturers can make ASICs. So Grin is an example of something that was at the opposite end of this spectrum, where with Cuckoo, it's very memory hard. It's very difficult to make an ASIC. And they only really had, I think, one or maybe two manufacturers. And I think one of those just gave up on it. I've never seen a Grin ASIC. I mean, maybe they exist, but I've never seen one. So that was the idea, is that we want to decentralize like the manufacturing of the ASICs. So we'll make a hash function that is relatively easy to implement in hardware.
yeah. That's interesting. That is a contrast with Ergo. Ergo is more of GPU mining because it is more inclusive
Yeah.
for people that have these general purpose parts that can be found in any gaming computer or whatever. But there does come with the challenge down the line if the demand, as the block rewards go down, and then the demand hopefully goes up for that protocol, our platform. Then how do you eventually the lines between having a giant GPU farm and a giant ASIC farm, the lines get blurred, right? Because now it's you're incentivizing more hash rate for less block rewards, and if profitability is maintained, which is another, it's a challenge in proof of work that maybe doesn't exist in proof of stake, in terms of like the game theory mechanics are completely different, right? But that's a and even amongst prominent members in our foundation, there are people that are of the opinion that eventually we do have to allow ASICs, or we should always maintain GPU ASIC resistance. So proof of work is very tricky, especially if you have dwindling block rewards. I think a secondary issuance like what you guys have, it kind of softens the blow, maybe reduces a bit of the pressure, because you have more ways to create more incentives. But in a pure, Ergo is seeking to emulate Bitcoin as best as possible, but also have all of the best innovations throughout the space on top of it as well. So, the UTXO model is extended, so you don't have gas. There's like very programming terms that I don't want to be pretentious and pretend I understand completely, but, in time transactions, just in time, and all of these different things that help you predict the cost of the transaction before it happens, and things like that. So you don't have to bid with gas like you would on Ethereum. So there's a lot there, and Ergo has, in my opinion, the pressure that, okay, as our block rewards dwindle, the pressure of trying to emulate a Bitcoin's philosophy has been done before. With all the hard forks of BSV and Bitcoin Cash. Of course, we're completely different from many of those, because we built everything from the ground up, from scratch. So it's not just a random copycat hard fork, and it includes a lot of novel innovations in terms of privacy and other things as well. So it's kind of the platypus. It's trying to be the best of all worlds. But when you have that proof of work setting and you only have that primary issuance, right? Miners are empowered, but it's different, right? Because Bitcoin started out with no competition. Now, and this is a challenge for Nervos as well.
Yeah.
How do you stand out in such a crowded, saturated space? And when you do have that block rewards issuance, and that's all you have to rely on, and you know, trust people will avoid 51% of tax because they're good-natured people. They just don't care all about profitability. It's so many challenges, and it's really like a hostage situation if it goes south. And I have interviewed one of the co-founders of Firo and how those 51% attacks actually played out in their blockchain. So just trying to take lessons from that and how to avoid all that when you have miners as the primary, miners and developers as the primary sort of gatekeepers of the blockchain in terms of how they can preserve its long-term viability, but primarily miners. But the developers, obviously, as you get more dApps and more utility for that native coin, or it goes like a sandbox, just like Ethereum and all of these other things, you get Oracle data and all this stuff. Hopefully the profitability goes up, but we only have a few years to really make sure that profitability is enough to to compensate for the low block rewards. We're going to reduce 85% of our block rewards over the next 5 years. Basically, it's no halving, it's a taper. But that's all I have to say about proof of work. I hope proof of stake. There's more of the Cardano approaches where people take it more seriously and hopefully piggyback off of their academic research and what they've done. Because I feel like a lot of networks like Avalanche or Solana, they're just trying to emulate success of Ethereum, and then they just see. I don't want to be defamatory, but in my view, a lot of these problems are seen. For example, with Solana, happens because you just don't maybe sometimes want to put in the full amount of work necessary to fully understand your risk assumptions with proof of stake, right? It just seems easier to implement. It's just an easier way. How are you going to do all of these game theories and miners and try to get hash rate and mining pools? It's a lot of work, even though it has the best possible security assumption. And then also the account-based model, right? I was asking, going back to why you guys chose UTXO versus an account-based model, where we know the scalability issues that can happen with that. So I'll leave it all to you now.
I mean, for one, it's an underexplored area. I think there's so many smart contract chains that have just taken what worked for Ethereum and just continued to run with that. For a lot of applications, it seems to make more sense to use an account model, and to even try to, like what Solana has done with the account model, is just retrofit things under the hood to make the account model more scalable. I think for a lot of DeFi stuff, it just makes more sense. So I know that's an argument for accounts instead of cells, but unfortunately, not nearly as many people have looked into how do we use UTXOs and what are the interesting applications of UTXOs. And for us, it seemed like an exciting opportunity to be one of those chains that tries to figure out what other people are not seeing. And I think for DeFi, it's definitely been challenging. I think the Sunday Swap episode in the Cardano community is probably the best known kind of demonstration of the challenges of UTXOs and DeFi. I think for NFTs, UTXOs make a ton of sense because UTXOs basically are NFTs. I think the cell model was very convenient for different properties. So things like we do account abstraction, like I was saying before, about how you could use basically like any wallet, any different wallet to authorize, or to hold CKB. That is possible because we use the UTXO model. We don't use accounts, because if you use an account model, you would have to define that this is what an account is. An account is this kind of key, and you hash it this way, and that makes your address. But with UTXOs, it's completely open-ended. It's just you need to authorize some sort of spending condition for this UTXO. You could not even attach a spending condition at all, and basically anyone could take that UTXO and spend it. The economic model as well of using that using the native coin of the chain as a means of storage, that's only possible because of the UTXOs, because we actually separate that this, this state belongs to this UTXO. If you look at something like a smart contract, on Ethereum, every account that interacts with that smart contract is all stored inside the account of the contract. You could have gigabytes of information that from millions of different users that are all aggregated in a single contract, and you just don't have that same logical separation that you have with UTXOs. I don't know if there's more to it. I think that's there. I mean, I think the cool thing that I'm starting to I guess see come into view is that Ethereum has this thing now called a roll-up centric roadmap that basically like all users will interact with rollups running on Ethereum, and the Ethereum base chain will just store data for those rollups, and people will challenge things that happened in the rollups. But if users are all at layer 2 and the layer 1 is just this storage of data, people aren't really using smart contracts on layer 1. What do you need accounts on layer 1 for then? It doesn't, it almost seems like too much functionality on layer 1 if everyone's doing stuff on layer 2. And I don't think that's something that we had really planned for. Like, I think that's kind of just an outcome of the way that things went. And it seems well suited to the way that Nervos is designed, but I don't think that's some sort of, I guess, crystal ball thinking on our end. I think it's something that makes sense because we felt from first principles that not having accounts on layer 1 made the most sense.
Is Nervos essentially kind of like cloud-based software? Like every byte would be kind of in that way, or how would you characterize it when you say that you can have all of these different wallets own it, possess it, and things like that? How do you view that? I know that's a very simple way of viewing it. I was just seeing if it can be simplified in such a way, or if it just can't. And what are the various use cases and economic utility based on that token model if it's not essentially software, cloud-based software?
I think if you own, we'll say 100,000 CKB today, which is, what is it, I think it's a few $1,000s. Like that, it doesn't really equate. If I were to tell you, like, if you have if you have a few $1,000s worth of this coin, you can store 100 kilobytes of data. Like not even a picture from your smartphone. Like here, all over the world, it'll be stored on 1,000 computers. Like, it doesn't really make sense. Like, people would say like that, like, why would I do that? But if that 100 kilobytes could be used to store, I don't know, potentially be used to store, the token information for like thousands of people, like that, right. It becomes a lot more useful from that small amount of data. And I think from like a holder's perspective, it's less about the data that I can store, but the economic value of that storage. So if I want to take a long-term position and say like this, I know this platform will be useful over the long term for people, then I can own this space. And more likely the stuff on that layer 1 is going to be code. But I think it's unclear at this point kind of what the L1 is used for in terms of storage, because a lot of things are on layer 2 and it's.
Yeah, no, it's really interesting. I like that there's more questions than answers in terms of the utility of CKBs. I do like that, because it seems that if you leave the doors open and you provide that, basic guidelines, you don't really know where it could go. I mean, that's pretty much every cryptocurrency. What could be the use case of this? Well, we'll see, right? Yeah. I think Vitalik Buterin from Ethereum, he mentioned that the most surprising use case that he saw come out of Ethereum was actually NFTs, something that we would think would be so foreseeable, but it wasn't a few years ago for him. So what are some of the various use cases other than data points, data stored on chain for CKBs, apart from the things that we've already touched on?
I think it really is just you're storing data on chain. I mean, I think what you said around like if you leave it open ended, you could do anything. I mean, I think that's really where we
Yeah.
are, which I understand is not. It's not a hugely compelling pitch. I think if you just tell people you can do anything with this data, it's people are
No,
not
I
going to
think
get
that is
excited
a
about that.
compelling
Maybe.
pitch.
All right, great.
I think it's a compelling pitch because
Um,
that's literally, like you said, Bitcoin is agnostic. What
yeah,
you could use with this, what you could do with the cell model is also agnostic in terms of
yeah,
it's only limited by what you can imagine can be done with it.
yeah.
I mean, that makes perfect sense for sort of this universal passport that Nervos is. So no, it makes sense. It makes sense that you have to decide ultimately what you're going to do with this and how you'll use it to implement it. So if there's a, what was the primary issuance number? You said 33 billion, 33.6,
33.6 billion. Yeah.
and the secondary totals to be what again?
It's 1.344 a year, and then the pre-mine was 25.6 billion.
Okay, so you wouldn't have more than 60 gigabytes worth of data in Nervos, right? That would be kind of the
Well,
cap.
that 1.344 is per year forever. So
Oh,
it
forever. Tail
will,
emission. Right, right,
yeah,
right.
it will continue growing. I think, yeah, we get to like 80 gigabytes by like 2040 or something like that. And
That's
yeah,
interesting. So if there's a widespread adoption of Nervos, Bitcoin and Ethereum, their blockchain data are in the hundreds of gigabytes,
yeah,
and it actually becomes kind of a unintended consequence of distributed ledgers that as they increase in adoptability and grow, that the amount to run a full node and
yeah,
have the full amount of data is going to become naturally a little more centralized,
yeah,
and that kind of takes away from the decentralized manner, which is where you get
yeah.
light clients and things like that. But that'd be very interesting, considering that 1 byte is very affordable right now in
Now,
2022.
yeah,
And
yeah,
yeah, and if you get that adoption, even with the tail emissions, it's going to be very compressed in terms of how much there is and the demand. It's gonna shift.
yeah. It's an
Yeah.
ambitious vision. I mean, I think so on the point of like the size of like Bitcoin nodes, Ethereum nodes, so the amount of data that you need to like remain in consensus with the network is smaller than that hundreds of gigabytes. So like
Okay. Yeah.
like with Bitcoin, you need the UTXO set, which I think is a few gigabytes. With Ethereum, you need the state, which is so I've seen some estimates of like if you run a node, I think it says like 90 gigabytes, but then apparently that's including like a whole bunch of proofs and stuff they do for optimization in the node, but the actual state is only like 40 gigabytes. But if you have all that historical data, like all the blocks that have been downloaded, then you get into hundreds of gigabytes. And for Nervos, like we wouldn't need all that cryptographic proof stuff. It would just be the 80 gigabytes or whatever that max state is.
Mm-hmm.
That's what you would have to store. And then the historical blocks, like you could have them or you could delete them. But in like the long run to remain in consensus with the network, you would only need to store up to the amount of data that, the number of CKBs in issuance. Like that would be your cap. And it's been designed that way so that anyone can run a full node, on their machine, because the idea is Nervos is this, universal settlement layer, and anyone should be able to check that everything is okay with it.
Right.
And there'll be layer 2 and layer 3 systems that are doing all sorts of other stuff.
Right. Can you speak on the importance of decentralization? And that's kind of a broad term that
Yeah.
is not really well understood, because
Mhm.
there's many different ways uh, to kind of measure decentralization. I think of
Mhm.
four that come to mind. I always forget one of these four, but let's see if I could get them all. For me, it's accessibility to infrastructure.
Yep.
to participate in the ecosystem, not only just buy the coin. Governance, of course. How the coin or token distribution functions, right? You don't want this, and that's kind of one of the challenges of proof of stake as well. Like,
Yep.
you just need capital in order to, kind of become a whale.
Yeah.
The work isn't there, right? It's proof of stake, not proof of work, and you can see how staking pools can just become kind of lopsided as you get more capital intensive. That was three. And the fourth one, I told you I wouldn't remember all four at once. It'll come to me. But how do you feel about the importance of decentralization and permissionless blockchain systems? And what do you feel public policy needs to do better in terms of regulatory clarity for decentralized protocols? And I know there's a lot to pack into one question. And how big of a role do you feel permissioned blockchains will play in the evolution of Web3? Because that's also a thing that nobody wants to talk about, that there are obvious optimizations when you can keep everything in-house, and they serve different use cases. Not everything has to be decentralized.
Yeah, I think your list is great. I think it does a great job of kind of like, defining in for people what this idea is, this idea of decentralization. I think when I think of decentralization, like I used to be really, I used to think a lot about these things. There's this book called The Starfish and the Spider, which is all about these decentralized organizations. And it had a huge impact on my life. And it talks about like the difference between like Napster and BitTorrent and Burning Man and probably a lot of other festivals that are more kind of corporately organized. And I think nowadays when I think about decentralization, it's one of those things that you more only see the absence of. Like you can make the argument that something's decentralized all day until you're blue in the face, but once something happens that doesn't happen to decentralized things, like it's very clear. So like Solana going down, it's like very like that. That's like a very clear like this. You can't make the argument that it's decentralized, because if it was decentralized, it wouldn't be down right now. And I think there's moments like that, and it doesn't happen very often. I think the purists will, they will, bang down your door on Twitter that this is not decentralized, this is not right, you can't do it this way. And people will be able to argue against it, they'll be able to fight it until those events happen. And it's like very clear that this was not decentralized.
It's easier to see what is centralized than what is decentralized.
Yeah, but it only happens when something goes wrong, and then it's like, this is what we needed all along. It's something like Bitcoin, for example. It's like everyone's going to take it for granted, and it's decentralized. Like it just happens. It's like anything else that, any other like natural force. You can just take it for granted. It just exists. Like nobody even needs to talk about it or think about it. It's just there. It's only when things go wrong, and I've started to see this in friends in the Ethereum community now. About this move to proof of stake, because like a good part of like moving into Nervos was like, one, I thought the idea was really compelling, but part of it was just not liking some of the ideas in the Ethereum direction and feeling like there was no, like this was not up for debate. This is what the plan was from the start. This was never going to change, and like that's okay. But at the same time, like I just felt that thing of there's nothing I can do about this, and I'm starting to hear that in other people who maybe are more like at the application level of playing around in Ethereum versus just being concerned with the core protocol. And they're having this feeling of like, we know that, especially in DeFi, like we know security assumptions change with proof of stake, but what are we going to do? Like somebody better fork, like that's the only, I guess that's what makes it decentralized, is there probably will be some sort of fork, or maybe everyone moves to ETC. It's unclear, but it does seem like there's some faction of the Ethereum community that will not be on board with the move to proof of stake. And because Ethereum is decentralized, they will have that option, but it's unclear what the consequences are. The idea of I guess which chain does USDC honor? You know, those kind of things. Like it's going to be
Mm.
messy, but decentralized things are messy.
How about permission blockchains? And maybe even the topic of CBDCs.
Yeah,
Is that are these things inevitable? Not the permission. Permission there has to be a part of this space that's preserved for that. That's just going to happen,
yeah.
and we can't expect everybody from a bureaucratic level or some sort of regional level that or even a company that already exists.
Yeah,
We can't expect them all to hop on something decentralized and not
yeah,
make something proprietary out of that, and try to keep things in house for their intents and purposes to survive, right? We if you're not using blockchain, you're not doing too well for your survivability and viability in the 21st century as we progress. So just like the internet had to be incorporated to basically every facet of life,
yeah.
blockchain has to as well, and there's going to be permission systems, and that's not inherently bad. And they may not even have a token because
Yeah.
the incentives are obviously just like a regular business. So how do you feel about CBDCs and permission blockchains when that
Yeah,
happens?
I noticed that we didn't cover the regulation part of your question before, so I'll get it in here.
Yeah, start there.
I
I have it
really
coming
think
up.
it's connected. Yeah, I think it's
Yeah.
connected in. So yeah, I think permission systems, or just like that spectrum of permissionless, like we need it. Like we have to
We
kind of
have to
turn
have
we have to turn the dial down, just for scaling reasons. And I think, like, if you look at like what Matic's been able to do, or I guess Polygon, you still call them Polygon. Just by changing the nature of the trust that someone has in the chain, like they could scale up, and that's necessary. Like we just can't. We're not going to need bulletproof security for everything, and it's just not in the interest of growing this ecosystem. Like we need to have a spectrum here, and I think where permission comes in is, I think at some point things get removed enough that you can say it's a permission system. So like Coinbase is scaling Bitcoin with a permission solution. This is kind of like the kind of like compromise I see that's necessary in order to scale to global demand, is that we need to all use these permissionless systems the same way we all use kind of like the common pipes of the internet. But what people actually interact with, or like Flow is basically a permissioned blockchain. It's run by a private company, and they can make deals with the NBA, and they can have their controlled fiat on ramp, and it works. It's great, and no one is going to be all that surprised when Flow says you can't get your money out because we think you're a criminal. It's just they should be aware that this whole time they're interacting with a permission system, and it works great. They can ease the onboarding experience. They can have full control. I think we just have to know that it's different, and maybe that's where regulators come in. And
Right.
I do think it's a lot about just enforcing or interpreting the existing laws. And I think through that process, it will be clear like where permission things should be and shouldn't. So I think there's a good amount of kind of regulatory arbitrage that people do in crypto. And I think that's only possible because of a permissionless chain. I think if it's happening on a permission chain, then you're clearly in the realms of like securities world. And I think regulators will, teams, the IRS is growing their team. I'm sure the SEC will grow their team as well. As this kind of permeates more and more through society, and I think with NFTs and DAOs, we'll just see more of this. I think just enforcing existing laws is going to be the way that gets done. And I think if something is truly permissioned and decentralized, then it won't fit into the rubric of these
Permissionless,
things.
yeah.
Yeah, so there's the OpenSea guy is facing 40 years in prison for a little bit of insider trading now, and people are saying like, well, why is no one charging the pump and dumps and these ICOs and all this other stuff that basically resides in like a legal gray area? It's because, clearly there's clearly a charge here. There's a crime that we can, say this guy did. And I think when you're in a permissionless world, it gets much harder to actually like create those charges. And I think as people get more creative with their schemes and lawmakers get more knowledgeable about what these systems like actually are and are doing and can really apply the letter of the law to these systems because they understand more about what they are and who's operating them and their properties, I think we'll see that permission versus permissionless really be about scaling instead of I guess control. Because I think people don't want the control. This is a point I really wanted to get to, so I know I'm talking a lot, but I think I think people will move away from permission systems when they feel that there's responsibility that they're taking on by using a permission system. And similar to decentralization, it's one of those things that you're going to see when it's something that it's something that's not there. That people are used to having that lack of accountability, lack of regulation. But if you're in a permission system, all of a sudden, like you are responsible. And I think people will turn away from permission systems, for that reason when it's appropriate.
Yeah. Well, the purpose of the interviews is so you talk a lot. So you talk a lot, you're doing exactly what you're meant to do. Don't worry.
Right.
So segueing from that into this idea of public policy and securities
I didn't
existing.
hit CDBC, did I? I missed that in that.
No, I give you a lot at once, and it is completely forgivable if like one part of my paragraph of a question gets left out. Yeah, what do you think about central bank digital currencies? And I feel like I'll say what I think first. Like what we were talking about, if something is open source and a government tries to absorb that and make it their own, how can you really? I think of it not even from an ethical standpoint, because I feel like that doesn't have enough weight if it comes to what a government will or will not do. Yeah. But if you do have open source software, which is essentially what cryptocurrencies are, with a tokenized incentive, right? Governments will take that and adopt it. And as we saw with UST, I mean, if it wasn't UST, it would have been something else down the line. There's just way too many blockchains trying to do a stable coin, not really understanding how to do it properly. It's just the way it is. So they take that example like, oh, UST, it fell. So now we need to issue our own regulated stable coin to protect customers. So yeah, I feel like it's inevitable. What do you think about CBDCs?
Yeah, so I read the Ergo manifesto, and I have to say that like reading that really made me think a lot about the space of CDBCs and kind of like the starkness of what we're looking at here. If you talk about a government basically having the ability to revoke freedom. I mean, the idea of like someone being able to spend money in the world as their freedom to acquire goods and services and things that they need, and to give the government universally deployed and enforced lever to take that away from people. That sounds very scary. It seems like in some jurisdictions it does go there. I think there's all sorts of different kind of ruling structures that find balance in the world. And it seems like maybe in some countries like that will be exactly what creates social order and like what they implement and what works seemingly well compared to the alternatives. I guess putting moral or ethical judgment aside, just simply the operation of a society and just different nations will do what works best for them, best in quotes. But I think in more, I guess, free places, I just don't think it will work. I think the first thing that I see is that it kind of goes against free market principles of the banking systems and payment processors, all that entire industry. If you have a CDBC, it just eliminates it. You just have people directly moving central bank deposits around between each other. And I think the idea that an entire swath of an economy that would be eliminated because a certain technology was implemented by the government, like I just see too much hesitation to actually make that possible. I mean, you could see something more like a back end system that just improves the way that the Federal Reserve in the US works with banks. Like maybe there's some improvements there in terms of like moving dollars between those entities. But I think usually when we hear CDBC, we think about, we as people in our phones holding a token issued by a central bank and moving that token between each other. And I just don't see that in a lot of, I guess, Western democracies. Like I just don't see that as ever being viable because it's so antithetical to the world that we know.
Yeah, the idea of crypto to help give back one of the most important freedoms you can have, if not the most important, well, one of the most important, depending on who you ask.
Yeah, I mean,
is
money is
financial power.
Yeah, yeah.
Financial power, and we're seeing all types of erosions of freedoms. When I had Ruben from Firo, we talked a lot about privacy. He lives in Malaysia. The types of the way governments can sway people to voluntarily erode their own privacy rights, little by little, never all in one go. Debatably with COVID and regulations and implementations of that, how kind of when you let the cat out of the hat or the cat out of the bag, it never goes really back in. You find a different use for it down the line. Yeah, crypto is really. I suppose if people had in a free, quote unquote, free society, have the option to use something like a non-CBDC, a different digital currency, and a CBDC, I would assume that they would go for the thing that is not controlled by government from top to bottom, just as a consumer preference, even though it could result in the same outcome. So maybe free markets, ironically, would decide if a government currency would survive out in when consumers have that choice. And that's a really deep rabbit hole if you think about, like, well, isn't the dollar basically a CBDC without being digital? I mean, it obviously is, right? And
I think it's that whole,
that, right?
Yeah, I think it's the whole infrastructure of the distribution and movement of dollars. And I think that the fact that that's not centrally controlled, and what you're saying about consumer preferences. So the one thing I've read about the China's digital RMB program is they're having to convince like WeChat and Alipay to use the digital RMB, and they're also having to convince consumers to use the digital RMB. And I think that idea that even in China, which we don't immediately associate with consumer preference or things like that, that there would still be this effort and some hesitation. It wouldn't be just something that could just be rolled out and everyone would be on board. That it would be more complicated than that. I think really demonstrates the challenges of the CDBC full scale implementation that some people would tell you is coming. It'll be here in 5 years. It'll be everywhere, and I think it's just much more complicated than that.
It is very complicated. I think of how people on the internet, when they had, well, first of all, we all operate in CBDCs already with our bank deposits and paying for things with our cards. So I would think that people wouldn't kind of want to reinforce the thing they already weren't potentially happy with before crypto came about. And just having the same thing recycled back to them in a different, in a so-called different way. I don't think that will survive. I'm kind of in agreement with you in kind of a free society. I think actually CBDCs can help reinforce the things that aren't controlled by governments. Meaning, if you have more accessibility to blockchain technology and exposure, because CBDCs are more prominent in other kind of like regular people's lives to use, it will actually reinforce and highlight the importance of blockchain technology and the other options a regular consumer has away from those CBDCs. So I think it would work against their own implementation over time. It will actually end up being the thing that makes them unsuccessful in most societies.
Yeah, whatever works best for people, that's what they'll do.
Yeah. Yeah. Can you touch on kind of securities in the blockchain space? Do you feel that the majority of blockchains right now in the crypto industry could be deemed securities, at least here in the US, if you use things like the Howey test and things like that?
I think newer chains, say like, just thinking about a theoretical chain that launches 2 years from now, I think those things will have difficulty. I think anything that's out there already probably is fine. I think once something is operating in a decentralized way, I think it's fine. I think that where the regulatory chokehold will come in is when people are booting these things up. Probably when they're raising money to start a chain, like that will be the point that a regulator can say, like, hey, what you're trying to do is actually an illegal sale of securities. But
so it'll be harder to get into the nightclub.
Yeah, I think so. I think there's, with these things, I mean, you just can't put the toothpaste back in the tube. Like the networks are already running, and it's like, sure, you could. I think EOS paid a fine. I think things like that. You may see things like that of if people did things that the SEC wants to say, like, you shouldn't do it this way, and people like flagrantly violated those things, like they'll go back and they'll find them, so then they can put on paper, they can put out an article, and people know, and they can say, like, hey, like, you're not supposed to do this. But in terms of like practically stopping the things that are out there and running, I mean, you can't. And I think as far as that energy goes, I don't know, most of the stuff has to do with consumer protection. And I think that is like the motivating like force of the SEC is to protect consumers. And I think you have a hard time arguing, like, if you have 100 chains that are out there running, it's like, what consumer was hurt by this thing, to go back and penalize them. But if people are buying into ICOs, and products haven't launched yet, things like that, like then you have an argument to say, like, we need to make sure that people don't get involved here.
Yeah. I'm not sure if it's all about consumer protection. I think it's trying to get your hands around the neck of the thing that you can't control as much as possible before you really can't control it.
Is that possible? Like, can they?
Is it possible? No, but with enough, it would get complicated. But with enough scrutiny, you can ruin the reputation of certain chains over time. And for the average consumer that is not going to watch this video, people that, I know news is very fluid, but you can kind of get people to unfortunately kind of concede to a government opinion about something pretty easily. That's usually what happens with wars, right? Everybody, let's get on the same page. Don't ask too many questions and understand. So there is that side of things. But things like Bitcoin, although I don't know, I don't really see that being a viable long-term solution in terms of miner incentives, just simply due to the block rewards, unless they get their transaction fees and those incentives in order long-term, since everything is kind of being taken off chain to Lightning. It's really tough, but at least those principles exist to say you can make something that is unstoppable. Whether it may be around profitably in a proof of work setting for 100 years, that can be a separate debate. But you can make that. We have the blueprint for that. And anybody that can program can essentially do this. And I think that is kind of where governments have to concede that you're not going to be able to control it as much as you want. Maybe you could badmouth it. Maybe you could stop new projects from arising if they do an ICO. But for example, with Ergo, there was no, try and tie that back in, since it is supposedly an Ergo-based YouTube channel. Have a lot of other I like to hear from other chains, though. I feel like the echo chamber of being in your tribe is not good. Yeah. That's not good at all. We need to share ideas. But Ergo never had a pre-mine. Ergo never had. It was fair launched as much as possible. There's proof of no pre-mine. There's a very tiny foundation, because it is as one of the members called it, the business manager for Ergo, a necessary evil, because it is almost impossible to launch something with the pure first principles of Bitcoin's white paper in today's crypto industry, because it most likely will always fail if there's not some sort of legal entity to make the connections. Since crypto exchanges were built around Bitcoin, not the other way around. So you can't have, you can't have that. That only comes because Bitcoin had the benefit of being a pioneer, right? To have this new industry emerge. So to keep in line with that, you only have like 4.5% of the total coin supply in the foundation's hands in order to provide nonprofit initiatives and things like that. But like something like that, if you have enough genius around you, you could pretty much launch a chain and try to take on the challenge of making it viable and survivable long term. Whether it's proof of work or proof of stake. So lastly, Matt, what are some of the milestones yet to come on Nervos' roadmap that you're excited to see come to fruition down the line?
Yeah, so we'll roll out the next version of the EVM in a couple of weeks. Now that's really exciting. I think we'll really see our dApp development ecosystem grow as a result of that. I think we really underestimated the difference that there was if you had an Ethereum compliant thing and if you didn't. Looking further down the road, there's optimizations around cryptography. So we have hard forks to improve basically the speed of the chain, I guess would be the way to put it. So we will be able to do more and more novel cryptography faster, and things like ZK rollups or whatever comes down the line, ZK stuff. We'll continue to improve our capacity there, which is exciting. We'll have light clients soon enough. I think we've had research ongoing for a few years now around how to build a solid CKB light client, and I think going into next year we should see things. I think that the designs are pretty much there now, and just it's a matter of implementation in wallets. And yeah, I think those are the major milestones. I think from our perspective, a lot of it is like the exciting things will come from people actually using just what's already there. So, I enjoy seeing kind of like the name getting out there and people kind of getting an idea more about what this is. And we are so different. And well, in speaking with you, less different, it was like UTXO based chain. But yeah, most conversations that I have, it's, we're kind of like the odd duck. And I guess people understand more and more about why we've done things the way that we have. We're attracting in diverse talent, and yeah, really interested to see what people can build, because I think that there's a ton of functionality that's there, and it's just kind of going unnoticed. And
I predict eventually there will be a shift, a necessary shift from people investing into a certain blockchain because they want to get more money out of it, profitability, and then creating more volatility as a result of them selling it once they get a certain return, and people actually investing into a blockchain that aren't programmers, right, and creating dApps, because the utility of that chain actually is the reason why they're investing in. So versus utility shifting as the primary motive versus profitability necessarily, and that utility would be the main driving factor of profitability, not the other way around, like we see with a lot of chains out there that, that for better or worse, the idea of their team's allocation is really to prop up a certain blockchain enough where the original seed investors and venture capitalists and team can make enough money and leave the retail investors holding the bag. And so I think that will happen. I think, I know it's been over 13 years now since Bitcoin launched, but I mentioned at the beginning of this interview that email was created in the early 1970s, and it did take over 25 years really for people to even adopt a reasonable personal computer and actually make use of that, begin to make use of that, pay bills online, something as simple as putting words on a page and say, hey, this is how we're going to do things right now from now on, and get people to trust using credit cards and other payment methods online. And then you got the iPhone, and then you get apps, and then you can build apps on the iPhone, and you can do takeout orders or delivery services. And I think blockchain is really the next push for that. And if you look at a lot of research being done on the adoption rates of internet users and crypto users, that is kind of going hand in hand. That's pretty much it for now. I mean, we're relatively young. We'll be able to see the results of the labor and the work being done behind the scenes long term in our lifetime, which is awesome. So I want to thank you so much for joining me for the interview. I hope you guys really enjoy what Matt had to say. I sure did. And be sure to check out Nervos. Don't just be in your little echo chamber. There's a lot of smart people making unique products, and there's a lot of talent to go around. So don't limit yourself. So thank you so much.
Yeah, thanks for having me. It's a great conversation.
No problem. See you guys next time. Bye.